Ever hear the phrase, the Fed cuts interest rates, and wonder what that actually means for you or your ability to buy a home? When the Federal Reserve cuts rates, they're lowering the federal funds rate. That's the interest rates banks charge each other to borrow money overnight. You can think of it like a wholesale price of money. If banks pay less to borrow money, they can offer loans like mortgages at lower rates. The difference between what banks pay and what they charge is called the margin or markup. It's just like a grocery store buying a product for $3 and selling it for $5. That $2 is their profit margin. So when the Fed cuts rates, banks can pass those savings on to consumers. They're not required to, but in a competitive market, they usually do. Lower mortgage rates means lower monthly payments, and that can increase your buying power. You might qualify for a larger loan or afford a home that was just out of reach before. Now here's the kicker. 96% of market participants expect the Fed to cut rates at their next meeting. That expectation is already baked into many of the mortgage offers you're seeing today. So if you're waiting for rates to drop after the Fed meeting, you might be waiting for something that's already happened. Now this is all based on predictions. If the Fed doesn't cut rates, mortgage rates could rise because banks were already counting on it. If the Fed cuts more than expected or signals more cuts ahead, consumer interest rates could drop even further. But here's another thing to consider. Let's say the Federal Reserve cuts the Fed funds rate and banks and lenders, they lower their mortgage rates even further. Now, because of this pent-up demand, we should have more home buyers in the market. More home buyers means more competition, and we could see homes with multiple offers, which drives home prices up even more. Now, I'm not trying to scare you into anything. It's just something to be aware of. And remember, if you do end up purchasing a home when the rates are a little bit higher than, say, 6 months from now, refinancing could be an option, especially if you can obtain a no-fee refinance and still lower your rate and payment. I'm keeping a close eye on all of this, rates, Fed signals, and how it affects your buying power. If you're curious what today's numbers mean for your situation, feel free to reach out. My team and I are happy to run current quotes and help you make sense of it.